Have you ever questioned how Bitcoin, a digital currency with no physical form, can hold such significant value? Let's take a moment to ponder this paradox. Bitcoin, existing solely in the digital world, has no tangible form, no intrinsic value. Unlike gold, oil, or other commodities, it's not something you can hold in your hand or use in a practical sense, and yet it holds immense value. How can this be? The answer lies in our collective belief and trust. The value of Bitcoin, like any other currency, is rooted in its acceptance. It's a shared illusion, if you will, that we all buy into. We trust that others will accept Bitcoin as payment, and this trust creates its value. In the digital world, where physical commodities lose their relevance, this trust is more important than ever. But there's more to it than just trust. Bitcoin's unique characteristics also play a pivotal role in determining its value. First off, Bitcoin is decentralized. This means it operates independently of a central bank or government. It's a currency that belongs to the people, not a particular country or institution. This decentralization makes Bitcoin immune to government interference or manipulation, enhancing its reliability and appeal. Another crucial factor contributing to Bitcoin's value is its limited supply. There will only ever be 21 million Bitcoins in existence. This scarcity mimics the finite nature of gold, adding a sense of security and stability. It's a digital version of a gold rush, and everyone wants a piece of the action. So you see, the value of Bitcoin is not tied to a physical commodity, but rather to its acceptance, its decentralization, and its limited supply. It's a fascinating blend of trust, technology, and scarcity that sets Bitcoin apart from traditional currencies. As we delve deeper, we will understand the fundamental factors that influence Bitcoin's value. One of Bitcoin's most appealing characteristics is its decentralized nature, but how does this contribute to its value? In a world where centralized systems govern our financial lives, Bitcoin stands out as a beacon of independence. It's decentralized, meaning no single entity, be it a corporation, government, or individual, has control over it. Now you might be wondering, why is this important? Well, let's take a brief look at our current financial system. It's heavily controlled by governments and banks, which means they can manipulate the value of currency. They can print more money, causing inflation, or make decisions that impact the economy, sometimes leading to financial crashes. And we, the people, have no say in any of this. But Bitcoin changes that. Its decentralized nature means it's immune to such control and manipulation. There's no central authority that can arbitrarily decide to inflate Bitcoin's supply and devalue it. Instead, it operates on a peer-to-peer network, where transactions occur directly between users, eradicating the need for intermediaries. And this, my friends, creates a sense of security among Bitcoin users. They know their investment won't be devalued overnight because of some decision made in a boardroom or government office far away. They have control over their financial destiny, and that's a powerful thing. This security, this freedom from control, inherently increases Bitcoin's value. People are willing to invest more in something they trust, something they believe in. And with Bitcoin, they have that. They have a currency that operates outside the traditional banking system, free from the whims of governments and banks. But there's more. This decentralization also makes Bitcoin borderless and available to anyone, anywhere, with an internet connection. It's not bound by the rules and regulations of any single country. It's a truly global currency. So when we talk about the value of Bitcoin, we're not just talking about its market price, we're talking about the value it offers as a decentralized, secure, and global financial system. Bitcoin's decentralization not only offers freedom, but also adds to its value. Bitcoin's limited supply is another crucial factor that influences its value. But how does a limited supply affect value? Let's delve into this. At the heart of Bitcoin is a process known as mining. It's a bit like digging for gold, but in the digital realm. Miners use powerful computers to solve complex mathematical problems. And when they crack the code, they're rewarded with Bitcoin. It's a clever system, but there's a catch. The total number of Bitcoins that will ever exist is capped at a maximum of 21 million. No more, no less. This hard cap is written into Bitcoin's source code, an unchangeable rule set by its mysterious creator, Satoshi Nakamoto. As of today, over 18.5 million Bitcoins have been mined, leaving less than 2.5 million still to be discovered. It's estimated that the last Bitcoin won't be mined until the year 2140, but the rate of mining is slowing down due to the increasing difficulty of the mathematical problems and the diminishing rewards for solving them. So what does this all mean for Bitcoin's value? It creates a scarcity factor. Unlike traditional currencies, which can be printed at will by central banks, leading to inflation and a decrease in value, Bitcoin's supply is finite. As more people become aware of Bitcoin and start to see its potential, demand increases. And as we know from basic economics, when demand outstrips supply, prices tend to rise. This scarcity is one of the reasons why Bitcoin is often compared to gold. Like gold, there's only a limited amount of Bitcoin in the world. And just as gold miners have to dig deeper and work harder to find new deposits, Bitcoin miners have to solve increasingly difficult problems to earn their reward. The limited supply of Bitcoin feeds into the classic economic theory of supply and demand, further solidifying its value. As we move forward in this digital age, the scarcity factor will continue to play a pivotal role in Bitcoin's value proposition. The widespread adoption and acceptance of Bitcoin play a significant role in its value. What does this mean? Well, let's break it down. Bitcoin, like any currency, is a medium of exchange. It gains its value from the trust people place in it. If more businesses and consumers accept Bitcoin as a legitimate form of payment, it not only increases its practical utility, but also its perceived worth. The more people use it, the more valuable it becomes. Think of it this way. If a shopkeeper in your town starts accepting a new kind of currency, you might be intrigued. If every shop in the town does the same, you'd probably want to get your hands on some of that currency. That's the power of acceptance and adoption. Let's take a look at the current state of Bitcoin adoption. Bitcoin is not restricted to just online transactions or tech-savvy individuals anymore. Major corporations have started to accept Bitcoin, indicating a shift in its acceptance. From multinational technology companies like Microsoft and AT&T to travel giants like Expedia, Bitcoin is slowly making its way into mainstream commerce. Retailers like Overstock have been accepting Bitcoin for years now, and food delivery services like Pizza 4 Coins are making it possible to order a pizza with Bitcoin. Even the world of sports isn't immune. The Dallas Mavericks, an NBA team, accepts Bitcoin for ticket and merchandise purchases, and it's not just businesses. Countries too are warming up to Bitcoin. El Salvador, for instance, took a historic step in 2021 by making Bitcoin legal tender. But remember, acceptance is a gradual process. It's not an overnight shift. As Bitcoin continues to navigate its way through regulatory landscapes and technological challenges, its adoption will likely increase. And as it does, it's reasonable to expect that the value of Bitcoin will follow suit. After all, value in the world of economics is determined by supply and demand. The more demand there is for Bitcoin, the higher its value will rise. The wider the acceptance and adoption of Bitcoin, the greater its value becomes. Now that we've examined the fundamental factors influencing Bitcoin's value, what might the future hold? In the world of finance, Bitcoin has emerged as a potential game changer. Its future potential is closely tied to a number of factors. First and foremost among these is global acceptance. As more and more countries and businesses embrace Bitcoin, its value is likely to surge. We've already seen this happening in certain sectors. For instance, many tech companies are now accepting Bitcoin as payment. And it's not just tech companies, even some brick-and-mortar stores are starting to accept Bitcoin. The next factor that could drive Bitcoin's future growth is technological advancement. Bitcoin operates on a technology known as blockchain, a decentralized and secure ledger system. As this technology evolves and becomes even more secure and efficient, it's likely that Bitcoin's value will increase. Another exciting prospect for Bitcoin's future is its potential use cases. Bitcoin is not just a digital currency, it's a technology. And like any technology, it can be adapted and used in a multitude of ways. For example, Bitcoin's blockchain technology could be used for secure data storage, for digital voting systems, or for creating decentralized digital identities. These use cases could potentially add significant value to Bitcoin. One more thing to consider is the future regulatory landscape. While there is some uncertainty around this, it's likely that as Bitcoin becomes more mainstream, we'll see more clear and supportive regulations emerge. These could provide a boost to Bitcoin's value. However, it's important to remember that while Bitcoin has immense potential, it also comes with risks. The value of Bitcoin is extremely volatile and can fluctuate wildly. It's also largely unregulated, which makes it susceptible to potential fraud and cyber attacks. As we gaze into the future, the potential for Bitcoin's growth seems limitless, but as always, only time will tell.